There is a nasty word that has been circulating in the media, and it's becoming more and more concerning to investors and workers. The word is stagflation. What is stagflation? Stagflation is made up of two words, stag and flation. Stag stands for stagnant economy with slow or negative growth and a high unemployment rate. And the flation part of the word refers to a period of high inflation rate. When you combine the two words together, you get the term stagflation, which is one of the worst predicaments to be in. In the first part of the video, we're going to see what economists and hedge fund managers like Ray Dalio, Peter Boockvar, and Komal Sri-Kumar have to say about stagflation. In the second part of the video, we're going to discuss how someone can protect themselves against a stagflationary environment. In an interview with Larry Summers, Ray Dalio mentioned that we're entering a period of stagflation. Let's take a listen.
What you said before, which is that there's going to be, when you're stuck with two trade-offs, too much inflation, or you're stuck with too much economic weakness, then you navigate through the middle, and that means something like stagflation. And so I think we're entering a period of stagflation. And I think the political and the wealth gap issues and so on create a set of circumstances that it's not easy to get out of, because everybody needs more money. And so do you get real money? Taxation is the way to do it normally, but it's taking money away from somebody, whoever it is, becomes controversial. The one easy thing throughout history that's always been done is the printing of money, because nobody even pays much attention to where the wealth is coming from. So what it does is, like, everybody got the check and nobody had money taken away from them. And so it's politically easier, but it devalues. Think about the enormous amount of supposed buying power that's in these bonds or other assets. I want to buy a bond, so I'm going to give a lump sum of money. It'll take me 50 years to get back what I gave, and then I'll begin to earn money after that, because it's a 50-year return in nominal terms. If you do it in real terms, I will never get back my money. I'll continuously lose my money. So that, for a creditor, that for a holder, is a difficult thing. And when you get that swing, that's an important force, I think.
So Ray Dalio thinks that we're entering a period of stagflation, as the economy is showing signs of weakness, but yet inflation remains high. Peter Boockvar, an investment officer at Bleakley Advisory Group, in a different interview, expressed the same concerns.
It's actually a step further. It's a stagflationary environment that no one on the Fed has any experience with. If only Paul Volcker was still alive, he can give some lessons to the current Fed on how to manage this. I think the Fed, it's very easy to try to predict what they're going to do the rest of the year. I think the Fed is going to take it meeting by meeting, in the sense that they'll hike in March, they'll hike in May, they'll talk about shrinking the balance sheet, but then they're going to have to make a decision about, are they going to focus on the stag part, the slowdown in the economy as a result of much higher prices, or are they going to focus on the inflation part and continue to tighten, with that being a priority, stable prices bringing down the rate of inflation? And their history, the current Fed, is to focus more on the stag side.
You can see in this clip that Peter thinks that we're already in a stagflationary environment, and he also sounds concerned that the current Fed is focusing more on the stag part of the word and ignoring inflation concerns, which might exacerbate the problem. In another interview with Komal Sri-Kumar, a global strategist, he reiterated Ray Dalio's and Peter Boockvar's concerns.
So the Fed cannot have a perfect global situation for it to increase interest rates. That's not the way the economy operates. And Jerome Powell and his colleagues just messed it up. We are in for a much worse situation. As long ago as last October, Joe, I talked about the likelihood of stagflation in 2022-2023. It was not a popular topic at all last October, but now it's being much talked about.
As you can see, Ray, Peter, and Komal seem to agree that stagflation is here. Now that we know it's here, how can we protect ourselves? Protecting yourself against a stagflationary environment is not an easy task. It all depends on how aggressive the Fed is going to be to combat inflation in a slowing economy. Now remember, the Fed has a dual mandate: maximum unemployment and stable prices. Now if the Fed fights inflation aggressively by raising interest rate by a lot, then treasury bonds are the place to be, because high interest rates tend to slow the economy further and could potentially cause deflation. However, if the Fed does not fight inflation due to fear of negatively impacting the unemployment rate, and inflation shoots up higher as a result of that, assets like commodities, gold, copper, and real estate tend to do better in this environment. Obviously, I'm not an investment advisor, and nothing that I say should be taken as an investment advice. So I thought that I would share with you a video of arguably the best investor of all time talking about how to invest in an inflationary environment.
But given the fact that we're dealing with fairly high levels of inflation in India, what would your advice be to people who are investing? What should they change? What should they do?
Yeah, well, inflation, Keynes said it many years ago that it's an invisible tax that only one man in a million really understands, and it's a tax on people that have had faith in their currency that the government's issued. The best protection, the best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents, and if you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate. And the best investment, passive investment, I think is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency.
As you can see, Warren Buffett, although he didn't say it explicitly, he kind of admitted that it's very difficult to invest in an inflationary environment. But what someone can do is invest in your skills, in your talent, to make sure that you increase your earning power so that you can buy more of the goods that have gone up in price. So work hard, my friend. Improve your skills. Find ways to increase your income. If you enjoyed this video, please like it, share it with your loved ones, and subscribe to our channel for more. Thank you.